Hi future millionaires! In this video we're going to talk about the top 5 dividend stocks for 2022, and they have to have at least a 5% dividend. This year has started out absolutely crazy with high interest rates, with a potential war, and it's just going to get crazier with many headwinds in development. So we are going to talk about very stable dividends that have a nice history of payouts. Keep watching so you can make an informed decision on each company. We will dissect each company, look at why I'm so bullish on it, and see how you can make passive income and cash flow for generations. Before we get into this list, let's look at exactly what type of dividend stock you should be looking at. We are in a crazy risk-on environment, meaning that we need stable companies that can make it through recessions or whatever else is coming towards us. So we have 3 criteria for these dividend stocks, which is it must have consistent revenue for the past 5-10 years. It also must have great earnings or cash flow, and it must have a great history of dividend payouts, preferably dividend raises, blue chips, dividend kings. Also for this year, I don't know if you've noticed, but we are in a value territory as opposed to a growth territory. So we also need to be looking at more value plays. So we need to be looking at the PEG ratios, at the PE ratios, and seeing which ones are undervalued as opposed to the S&P 500. Because as you know, once we have higher interest rates, it's harder for the businesses that are not yet profitable or are in growth stages to survive. And last, we're looking at a debt to equity ratio. It should be lower than 2. We don't want a company with a lot of debt right now. We need safe, secure companies. And as a bonus tip, if we have 100 shares of a company, especially a dividend, these are the juicy ones, we can sell covered calls and basically make rent on owning those shares. If you would like a video on that, please leave a yes in the comments. Okay, starting off with number 1, Main Street Capital Corporation, ticker symbol MAIN, MAIN, is based in Houston, Texas, and is a BDC, a business development company, which basically means that it invests in companies that can't go public yet because they don't have enough capital, and let them make some profit. It is a private equity firm that specializes in recapitalizations, management buyouts, refinancing, family estate planning, and industrial consolidation. In Q4, they beat expectations with an EPS beat of 8 cents and revenue beat by $9.7 million. 9 hedge funds currently own Main, up from 5 in the previous quarter. Main is currently trading at $39.94 with a 52-week low of $37.43 and a 52-week high of $47.13. The dividend yield is 6.46%, very healthy, with a monthly payout. Looking at the 1-year chart, this stock is barely up yield to date, which is actually fantastic in this kind of market. If we look at the 10-year chart, we can see a beautiful, healthy climb in stock price with the exception of March 2020. The stock has appreciated 190% in the past 10 years. It has a market cap of $2.86 billion with a low PE ratio of 8.33. Since 2017, net income has gone from $170 million to $330 million, and revenue has also increased from $205 million to $289 million. Since 2013, Main has steadily increased dividends from 16 cents to 21.5 cents, with an extra 10 cents just this month. Dividends have been incredibly consistent throughout the years. I have to tell you, I love this stock. I love ticker symbol O and ticker symbol STAG. They are my favorite monthly REITs because they provide quality, are managed well, and have consistent cash flow for investors. I am looking for an opportunity at $38 to hold as a support. As I do not see many tailwinds this year, I believe as investors we need to slowly add to positions when stocks stop dropping and start forming bases. Slowly trickle in at a price you believe is undervalued for the stock. This market will provide opportunities. Arbor Realty Trust is the next dividend stock, ticker symbol ABR. This is a New York-based commercial and multifamily lender whose goal is to value customers so much so that they call them partners. They offer a total nationwide solution for loans. They offer a total nationwide solution for financial needs, including Fannie Mae, Freddie Mac, FHA, bridge loans. They are a mortgage REIT. They operate in structured and industry business. Unlike more popular MREITs, they mostly invest in bridge loans, in multi and single family, which are supposed to grow in the future as housing demands are increasing rapidly. Arbor Realty is now trading at $17.27 with a 52-week low of $15 and a 52-week high of $20.74. I sound like a weather forecaster. The dividend yield is 8.57% with a quarterly payout. While their one-year stock price looks like it's going sideways, if we zoom out to the 5-year chart, we can see consistent growth, which is exactly what we want. The stock went up 325% since March 2020 lows and has traded at a consistent $17 support. The stock has gone up 116% in 5 years. Due to its unique structure, this MREIT has weathered the storm. They have a market cap of $2.63 billion and a low PE of 8.49. They have consistently increased their dividend payout from 0.075 cents at 5.1% to 37 cents at 8.4%. Note that even during the market correction in March of 2020 and throughout the pandemic, they were able to maintain that dividend. This is especially important for investors seeking passive income. From 2017 to 2021, net income has grown from $73 million to $339 million, and revenue has grown consistently as well, which is all good, from $272 million to $661 million. Now I know what you're thinking. Interest rates are going to be a big concern, but I believe since this company is unique with their business structure, this is a good stock to add to your watch list. Just be patient. I am looking at this stock under $16.50. I believe Wall Street is just lumping all of the MREITs together and shorting or selling them without looking at the actual business aspects. This leads to a great opportunity for investors, especially with this company. Before we get into the next stock, I just wanted to remind you that dividends may or may not be taxed on income, which is a lot. I know that xyld just went through this. So just be sure that if you can, you have your dividend stocks in an IRA, a Roth IRA, individual IRA, SEP IRA, whatever you can do for that would definitely not benefit the tax man, but benefit you. So just keep that in mind that taxes are a big factor in dividend stocks. The next dividend stock is Gobal X S P 500 covered call ETF, or ticker symbol XYLD. It's a monthly dividend that helps you generate passive income through covered call writing, which their website says historically produces higher yields in periods of volatility. It tracks the S&P 500 and sells covered calls on S&P holdings. They have been running for 8 years now. For those of you not in options, selling covered calls is basically renting out shares you own. While xyld doesn't actually own the shares, they sell covered calls while you get the rent, aka premium, in terms of dividends. They sell at the money covered calls. Selling covered calls is a low risk option strategy that I personally love to use to generate extra income on shares I already own. XYLD is trading at $46.77 with a 52-week low of $45.85 and a 52-week high of $51.16. The expense ratio is 0.60% with net assets at $903 million. The dividend yield is 9.34% with a monthly payout. While we are seeing red for year to date overall, the ETF has gone up slightly at 15%. This is a great stock to have on your watch list if we stay in a bear market, as it will generate passive income for you. In my opinion, this is a better option than xyld and RYLD in 2022, as investors are looking towards value. XYLD follows the NASDAQ, which is heavily weighed on tech companies, while the Russell contains mostly small growth companies. I believe XYLD will provide a good place to park money into a more diversified ETF. Dividend growth has climbed steadily since inception, starting with 13 cents in 2013 to 48 cents currently. While the S&P 500 is still facing headwinds, I will be looking for support around $45, $46. If that holds, I would look at potentially buying. One quick tip is to sell cover calls on these ETFs for a bit of a ninja trick. The next dividend stock is EPR Properties, or ticker symbol EPR. It's the leading diversified experiential real estate investment trust, or REIT. Total investments are $6.4 billion at 343 locations. They own 175 theaters, many eat and play and attraction properties. They beat Q4 earnings very handily, I might add, with an EPS beat of 13 cents and revenue beat of $14.52 million. They also gave FFO guidance of 4.30 to 4.50. And they recently announced an increase in dividends by 10%, which was a pleasant surprise. I was very surprised by that and happy. I believe since the world is reopening, I've been seeing this throughout New York City, there's a lot of reopening. EPR will gain revenue from reopenings and less mandates. One thing to keep in mind is their theater sector. As streaming becomes more popular, theaters will need to renovate and spend more, which may be a headwind for EPR. EPR is currently trading at $51.71 with a 52-week low of $41.14 and a 52-week high of $56.07. The dividend yield is 6.38%. with monthly payouts. The one-year chart shows relative strength, which we love. That's a very good sign. Other ones are ticker symbol BMY, showing really nice relative strength as well, and ticker symbol ABBV. The healthcare sector is doing pretty well this year, and this is just in the bear market, probably due to the 10% dividend increase, which is great and showing the strength of this company. They are up almost 5% yield to date. In 10 years, they have gained 280% in stock price. While this does look like a riskier dividend stock due to its less than ideal action during the pandemic, I believe it's in a good position because they have good cash in case of a recession. They also don't have debt, they don't dilute shareholders, which are, again, great signs. They are looking to fully recover by the end of this year, which is promising, and while there hasn't been much growth for the past 3 years, management has been taking necessary steps for future growth. I would personally be interested in buying at $45.50 if support was found. It has been steadily climbing back, and I believe this is a good turnaround play. The last stock is Pembina Pipeline Corporation, or ticker symbol PBA, an energy transportation and mainstream provider. Based in Alberta, Canada, it has been in operation for more than 65 years. They own pipelines that transport hydrocarbon liquids and natural gas products produced in Western Canada. They have 3 business sectors, which are pipelines, facilities, and marketing and new ventures. Pembina currently trades at $35.60 with a 52-week low of $27.63 and a 52-week high of $36.53. They have a market cap of $25.75 billion. As you can see, growth has been high this year. Yield to date, they are up 21%. Overall, the stock price has gone up a modest 68%. As you can see, the 5-year chart, the stock price has recovered from March 2020. The dividend yield is currently 5.56% with a monthly payout. Since 1998, the dividend increased from 8 cents to its current 16 cents. This dividend has been consistent and has continued despite recessions. Pembina has a stable and long-term relationship with its many contracts and many partners. It has predictable cash flow that has shown strength for several decades. In my opinion, I believe this is a good stock to have in your portfolio.
I would like to get this stock at $30 or below. While I believe this company is good, they don't have much growth.
So now you know my top 5 dividend stocks for 2022. Be sure to check out skingame.com where you can see in real time whether my trades are accurate or not. This is a wonderful platform to see who's right and who's wrong with their trades. They give you a smart rating so you can see my rating. Come follow me there and it will be a lot of fun. This is Supergirl Investor here to save the world and make you wealthy. Please leave a comment down below and let me know what are your favorite dividend stocks and if you like to invest in dividends. Thank you very much. Please leave a like if you found this helpful. I will see you in the next video.